Where?
Just in the comments. Make sure you open the.
Oh yeah, I will do. There we go. Good afternoon, everyone, and welcome to today's Trading the US Open Live. And today is Thursday, the 13th of September. Let me spit that out properly. And you're very welcome to this trading session here at the Live Trade Room. And to just let you know what we do in a little bit more detail, we look for high probability trading opportunities during the US Open session. And we have a process for us to identify high probability trades where we have a really strong focus on risk management. So our ability to execute trades in this market will be scrutinized. You'll see how we identify these opportunities, and more importantly, how we get into these trades and how we manage those trades accordingly with one view, and that is to book in profit. So what we look to do is to cut a loser short, and we look to let our winners run. As soon as these markets start to act and behave in a more conducive way for our style of trading, let's put it like that. So we're hopeful we'll get those opportunities. They've been few and far between over the last few days, to be fair. We will look at the charts now very, very shortly. Just before we begin, if we could start with our risk warning, please do familiarize yourselves with the risks involved in trading these financial markets and be, of course, aware of those risks at all times. In addition to that, let's start with a quick overview of some potential market moving news. And we've got two major events today. Both are central bankers. There's a bit of a delay on that for some reason. Okay, so here we are. So today we've had a decision made by the MPC and the Bank of England to keep rates at 0.75%. So no significant change from the Bank of England with any material impact. Now they have made suggestions with regards to increasing their understanding of growth, and so they've increased those expectations ever so slightly. Sorry, I'm just looking at our live stream just to make sure it's okay. It looks like it's okay, which is great. So we've had that from the Bank of England. We'll have a look at the charts now very, very shortly so you can see how that has been affected from a price action perspective. But we've also got the ECB, and they've kept things the same as well. There's a main refinancing rate of 0%, and they're keeping that for a prolonged period of time, potentially actually post summer 2019. Now that is pretty much what is priced in to the euro as things currently stand. So we're not overly surprised to see the euro not really react to any great extent. Plus we have the ECB press conference at 1:30, and which is in about 19 minutes, and we'll have a look at a little bit about what Mario Draghi is saying about the eurozone. Obviously a major player in these markets, and with a lot of geopolitical risks as well on a global stage. We're talking about trade wars between the US. They're currently negotiating a NAFTA agreement with Canada, also with China, talking about deficits and surpluses and things like that. It's back and forth, and all of this impacts potential global growth, which is something that's really concerning for these global markets. And within that, we've obviously got currency, the foreign exchange markets, and the value of each currency is of real importance. We know that Trump has already suggested that he thinks that the price of the US dollar is overvalued, and probably largely against the Chinese yuan. However, we know that the US administration would be happy to pursue policies on the back of weakening the US dollar. So there's this bit of tailwind kicking into the US dollar as things currently stand, certainly in our opinion. Now, in addition to the ECB press conference, which will take front and center, we also have CPI inflationary data coming out of the US, likely to be certainly on these monthly figures. The print is likely to be very close to this, and it may impact the dollar marginally at 130. So we'll keep a close eye on this. Yeah, hi Ronnie. Welcome to, thanks very much for joining us here at the live trade room. Delighted to have you on board. Hello again, Mike. Yeah, pound yen, we shall absolutely have a look at that. And I promise, Mike, we'll have a look at the euro pound very shortly as well. I'm conscious of the time, so I will move on to the charts now, and we'll come back to the news for Harpers 1. And we will have a look at what Draghi has to say about the Eurozone and the monetary policy behind the ECB. So you're suggesting a buy trade in the pound yen and a potential sell trade in the euro pound. Both of those are obviously pound strength, so a good place to start with that is the pound dollar, just to see how these markets have reacted to this news. So we're clearly seeing some significant quiet market conditions in the build up to this event, but we're all waiting for the ECB to see what they have to say. Hello Scott. ECB looking hawkish again. Yeah, it's hard to say that it's looking hawkish. They will be looking to increase interest rates, I guess, in the latter part of 2019. That is potentially already priced in to the euro dollar. It's really, any developments on that is what the markets will be really looking for. And whether the ECB keep the door open to keeping rates at zero for longer. They obviously have the concern with the inflation, so they do want to, their mandate is for price stability, so they want to make sure that inflation is working for them as well, so they're keeping very close eye on inflation, of course. Scott, the ECB looking hawkish again. Euro dollar could rally for some time. It does remain to be seen whether that will be the case. So right, without further ado then, let's slide across to the charts. We know that there's some major news events in the pipeline. We'll come back to that at 1:30. The problem with that statement there, Scott, and everyone's entitled, that's what makes these financial markets so volatile, is that people have different opinions, and it's important that that people's opinions are tested with their commitment to moves in these markets. So what we mean by that is, if you have the opinion that the euro dollar is going to increase in value, that very well may be the case. But for us, and looking at these markets technically, what we would need to see in order for that to be the case would be a break above. Let me get up my pen. So it'd be very difficult for us to look at this market at this price and suggest, right, well, we're going to be rocketing up to the upside at this price point. For us, we certainly wouldn't have the confidence to be making that decision based on this current price action. The reason being is we're currently in a bit of from a price action perspective, we're in a descending triangle, which means that the price is very likely to narrow if we remain inside this consolidation. Yes, we did have this little breakout, and we've had it in a few other markets as well, but we would be very careful to suggest or to make that assertion that the euro dollar is going to continue higher for a prolonged period of time, because the reality is price action is not supporting that view. So, and of course, this goes back to the type of traders we are. We're not trading these markets fundamentally where we've got information to suggest that the euro is going to strengthen. We don't want to get involved in that type of trading. What we do want to do is make our decisions off the back of the commitment of others, and that is traders putting money where their mouth is, and things for us to identify a high probability trade. The first thing is the markets. So with that in mind, do we have clear-cut directional bias? The answer is no, because these markets are moving in a cycle. Now, a bit of Are we having some disruptions on the? Okay, so let's continue then. So I'm going to bring up Draghi in a second. What you can see from this daily time frame here is the potential for this market to start squeezing higher. Now, the level that we are very interested in is the 1659. We're currently at the 1640, so we're about 20 pips away from this market making a concerted effort and push above the 1659 level. So when we go into the smaller time frames, we can see that there's a significant amount of volatility just creeping in a very short period of time. And let's keep an eye on what this price action is doing. You can see the choppy nature of it, the breaking higher and then the strong reversals, and this is we kind of want to clear a lot of this price action. So keep a close eye on the 1659 to the upside, and I shall mark that level with a bit of a level in there. Okay, I'm told, guys, that our stream is now back to normal. So again, apologies for that difficulty. We've reset it, so hopefully we're okay now again. So straight away, we're seeing a strong rejection in this candlestick on a 15-minute time frame. So keep an eye on that 1659 to the upside and the 1609. So there's a 50 pip move that we can look to concentrate on. So what I might do is just zoom in just a little bit more. I'll just put this level just up here, just to let you know, and then this level to the downside at that point. So as you can see, I mean, it may be the case that Draghi hasn't actually sat down yet, so let's go and see if that's the case. We'll put him on, listen to his opening remarks, see what he has to say. So we do have the Mario Draghi, should I say, his ECB press conference now. So let's listen, and I'll just put him up on screen so you can hear him.
Past labor market reforms and by rising wages. 8% in 2019 and 1.7% in 2020. Compared with the June 2018 Eurosystem staff macroeconomic projections, the outlook for real GDP growth has been revised down slightly for 2018 and 2019, mainly due to a somewhat weaker contribution from foreign demand. The risks surrounding the euro area growth outlook can still be assessed as broadly balanced. At the same time, risks relating to rising protectionism, vulnerabilities in emerging markets, and financial market volatility have gained more prominence recently. According to Eurostat's flash estimate, euro area annual HICP inflation was 2% in August.
Please do keep an eye on this price action just creeping above the 1650 level. The level that is of interest to us is the 1659. What I'm going to do is I'm going to have a look at this on a much smaller time frame. Let's look at it on the minute time frame as well. So you can see the sort of the volatility, the movement of this market to the upside and to the downside. We are going to look to take a trade, but it's going to be above the 1659 levels. So we might get in on the breakout. We won't be putting a significant stop in this market, but we'll be looking at maybe like a 15 pip stop loss. Let's see if a little level is created at these prices down here. So the level we're looking for is probably 1661, 1662 or something like that to buy this market. So what would be great is that if we saw a little bit of a pullback at this price, and then we could move higher, we could capitalize on the breakout and probably have a 15 pip stop loss in this market. So we're probably not going to get that, but we still need to see the weekly level be broke to the upside for us to get into it. And there we go. It looks like we're breaking to the upside. So we've got that closed. Let's see if we get the continuation. Right, let's get into this market and okay, so we're going to take a 20 pip trade in this market above the 1659, so above the weekly level. I just want to take note of this low in here. It's the 46 level. Uh, 1646, and so we'll have a 2 pip exposure in this market. So now we're in this trade. Let's see what Draghi has to say for himself. We are knowledgeable that we're likely to experience a significant amount of volatility, and you can, when you're trading situations like this, you can get slammed out of these trades pretty quickly, which is why we're just looking to get in at a very specific level. This is a weekly high. This is a multi-day high as well. And if this market kicks on just a little bit, it's likely to provide a little bit of support around this area. So we would like it to kick on a little bit more if we possibly could. So let's listen to Draghi and we watch this price action.
August 2018, down from 2.1% in July. On the basis of current futures prices for oil, annual rates of headline inflation are likely to hover around the current level for the remainder of this year. While measures of underlying inflation remain generally muted, they have been increasing from earlier lows. Domestic cost pressures are strengthening and broad. The Governing Council urges specific and decisive steps to complete the banking union and the capital market.
Okay.
Mr. Draghi, first question is, you've decided to reduce bond purchases from October, but you still left the ending of the program at the end of the year open or dependent on the incoming data. Could you walk us through the arguments behind that decision? Why leaving the ending of the program still open? And my second question would be, based on the forecast you've received today and the discussion that you have, would you say that the output gap in the Eurozone is already closed, or is close to being closed this year, or we still have to wait for that to happen in next year? Thank you.
Thank you. The answer to the second question is that we've seen growth rates now for some time above growth potential. And to the first question is basically we haven't discussed this. Am I reading here what is here? We will reduce the monthly pace until the end of December, and we anticipate that, subject to incoming data confirming our medium-term inflation outlook, we will then end net purchases. I think that's the text, that's what we've discussed. We haven't elaborated on that. But let me make clear that it's when we stop, this doesn't mean that our monetary policy stops being accommodating. The amount of accommodation will remain very significant. And through our investment policy and through our forward guidance and interest rates. Thank you.
Mr. Fallis?
Thank you. Tom Fallis from the Wall Street Journal. Your new economic forecasts suggest that inflation will hover around 1.7% for the next 2 and a bit years. Is that consistent with the ECB's mandate and the decision to phase out QE? And in relation to that, second question, shouldn't the ECB be aiming for an overshoot on inflation?
I'm sorry?
Shouldn't the ECB aim for an overshoot on inflation rather than an undershoot, given that it's been below target for so long? Thank you.
Thank you. The answer to the first question is yes, it's consistent. We are seeing convergence, and that's what the discussion today confirms. We're seeing convergence of the inflation rate to our aim, and we have confidence that this is happening. Confidence based first and foremost on our monetary policy, which remains accommodative.
So just to clarify, guys, we're obviously keeping just abreast really of the fundamental discussions, but really what interests us is the technical break, and obviously we're getting in on that basis. So yes, it is interesting obviously to listen to Draghi and get an understanding behind the thinking behind the ECB. But what we actively do is trade price action. And as a result, we're quite happy to get into this trade at this level. It's above a weekly high. Let's show you what this looks like on a daily candlestick. So we could really anticipate this move, squeezing up to sort of 1700 comfortably. And let's see if we can stay in this trade. There's a number of daily highs preventing prices from squeezing lower. So let's see if we get that continuation to the upside and maybe get a nice explosive move to the upside. And let's just hope that we don't get a really strong reversal candlestick off this bit of price action. So we want to see this market continue up to somewhere around the 1700 level, somewhere in and around this level, and we'd be happy to take profits at that point and maybe look to get into it again at that point if we get an opportunity. So that is firmly our plan for trading this market. And now let's give it the time and the space to see if we can capitalize on that move. So there's a number of sort of levels of resistance. We have the weekly levels. We have previous daily highs around the 1650. And it certainly doesn't look like there's much appetite for selling this market just yet. So hopefully we'll get more of a move to the upside. So let's see how we get on with that market. Let's see how these markets have been impacted elsewhere. There's another bit of news actually I just want to make sure we keep an eye on. And that is the inflation selling coming into this market is off the back of some negative news coming out of the US. So we can look for opportunities above the 30.89 level, which is the level that we were trading the other day before we got a really sharp, significant pullback off that level we were breaking out above this level, and then we got some really choppy and very negative price action start to kick into the market very, very quickly. So we can absolutely look at that market as well. So the yen has strengthened since the 130 news. So we were looking at these highs in here, and now we've pulled off 50%. So getting continuation in this market now as we look at this. Okay, we're getting a nice little move now to the upside in the euro. Are we seeing similar price action across the board? Yeah, so we've seen the Swiss extend lower, and the Canadian dollar, although that has one eye on the oil markets as well. So we're seeing the dollar sort of weaken across the board. 71, 77, and now we're up to 72.20 level. So a 40 pip move in there. So at least we're getting a little bit of volatility creep in. Let's have a look at the euro yen. We quite like this market above this level. See if we get a bit of a pullback, we might be able to get into this market to the upside. So let's look at these markets on a multi-screen. Let's also look at the pound, which looks like we're breaking. So we'll come back to these four markets shortly. Let's have a look elsewhere. We're getting the dollar's selling off, so we're getting a bit of strength creeping into the gold market. No major surprise, but we've been moving sideways for sort of 3 weeks now in this market, so that's the prevailing wind. And no significant movement or follow through in the oil markets. We are getting extensions higher, as you can see, eventually in some of these markets. So and let's see how the Euro Stoxx is reacting to it. It's just maintaining its kind of previous highs. Excuse me. So let's look at all these markets then, and we'll trade what we see. So we're getting continuation to the upside. The pound can be bottom left. And let's stick the euro yen. So pullbacks now would be, we've got the volatility to the upside, so if we can capitalize on a bit of a pullback in the euro yen, back to the weekly low would be ideal if we can, somewhere around there. and then finally the pound yen. So hopefully if we get some follow through, we could get some good trades off today. I suppose that's the big question. Will we get the follow through in these markets? That's the million-dollar question. Okay, so got a nice strong move to the upside, bit of a pullback, somewhere even down to the weekly low would be absolutely fine. A natural pullback, unless we just get straightforward continuation to the upside, which again is very possible. And I just want to have a quick look at this on the weekly time frame. So we could expect, you know, a nice sort of continuation to the upside in this market. So we can go ahead, see if we get a close above this level in here. So if we get a close above the 130.12 level, then it would give us a fairly nice, neat, concise entry to get into this market to the upside. So this is our trade plan, with sort of been driven fundamentally as well, so that's obviously a good position.
And second, on the underlying strength of the economy, the ever improving conditions of the labor market. May elaborate on that. So
that was just Draghi there in a little bit more detail. The strength in the underlying economy. So just steady as she goes, basically, I think seems to be the plan. Okay, so we're getting that move forward in the see if we get that close. So I'm just looking at the Euro Yen here on the right hand side, just waiting for this market to close above that level, the 130.12, and then if we get continuation we'll get into it. So there's the close. So let's get into that market then. And again, we have a really small, relatively small stop loss on that. So we're getting the pound yen breaking higher as well. Let's have a look at the euro pound. So the euro is strengthening against the pound. So we're actually, it makes sense to buy the euro dollar and the euro yen for that reason. The dollar yen, not much going on, sort of battling against each other. So we're absolutely in kind of the right types of trades, as you can see. Okay, so we are getting the moves that we're looking for in the two markets that are moving the best. So might just have a quick listen to Draghi just one more time, see if there's anything else that he is adding.
The financing conditions and even though they have tightened somewhat since the last meeting, the lending conditions to firms and households remain very, very favorable. So that was the answer. The second question was about Italy. Yeah. Well, let me say something I was about to say before when I was asked about Italy. First of all, words in the last few months have changed many times. So what we are now waiting for is facts. And the main fact is the draft budget law, and not only that, and the subsequent parliamentary discussion. And we have to see how that is. And then savers, capital markets, investors will formulate their view. Now, unfortunately, we've seen, as you said before, as you hinted before, we've seen that words have created some damage. And interest rates have gone up, and they've gone up for households, and they've gone up for firms. However, and by the way, all this is another interesting point. All this hasn't created much of a spillover to other euro area countries. So it's remained pretty, at least so far, pretty much an Italian episode. Now, having said that, we have to basically be aware that the Italian Prime Minister, the Italian Minister of the Economy, the Italian Foreign Affairs Ministers have all said that Italy is going to respect the rules. Thank you.
Mr. Pellino? Hi.
Rino Pellino from Rai, Italian Television. I go back to Italy, but this problem with the spread could be a possible challenge for the global market, and then so that the European Central Bank could decide next year to take other measures to, so like in the...
So the Eurozone has real headwinds against the political situation in Italy, but in addition to that there's issues with Poland and Hungary as well, and it's all around sort of not respecting kind of fundamental principles which are very important to the Eurozone. So the only reason why I draw these lines here is to just identify kind of a good profitable kind of 2 times risk reward, potentially likely to provide a little bit of resistance around this level. It's got the potential to squeeze a little bit higher though, so we'll just put this level in here as a take profit and see if we get that little thrust further to the upside. So we've had a bit of a rollover from the upside to the downside. So we know and expect that always to be the reality of trading. You have to understand that these markets will pull back, which is why you create your line in the sand, because you don't want to expose your capital to 40, 50, 60 pips worth of potential pullback, which can happen quite easily. So we're quite happy with the level of exposure, just a 13 pip stop loss, to see if we can get this market really driving to the upside. So we want to be breaking the 130.24 level, and we're currently at the 130.12. So we want to create a series of lower highs, higher highs and higher lows, and not get a market that's flushing higher and then reversing back below, and another one of those type of false breakout trades. So this is a market which is attempting to break above the 145.90, completely clearing out these areas here, extending above it, and it's just kind of pulling back below those levels now, and we'd expect it to continue higher, but we'll have to wait and see how these trades pan out. Yes, of course. Right, I got carried away with Draghi and his speech and some of these trades. Yeah, so what we're going to do now, guys, we need to switch over to our traders at the live trade room. So we're currently in the euro dollar trade to the upside and currently in a bit of profit at this. We were in a bit of profit in the euro yen. It's pulled back a little bit. Hopefully this creates a little bit of support here now and we get the next leg to the upside, at which point we can mitigate a bit of risk on both of these trades, maybe even take the risk off the table completely in the euro dollar. And as we look across these markets, there's the euro dollar and the pound yen, the pound dollar and the pound yen. We shall just bide our time and see how these trades start to pan out. But we do expect over the short term, for the remainder of the afternoon, for the euro to continue. We don't know where these markets are going to pull back to, of course. We can only trade the conditions, but hopefully we'll see a bit of a move to the upside again fairly shortly. Okay, so that just about concludes then today's Trading the Markets Live, Trading the US Open. Please do feel free to connect with us. Just subscribe to our channel. Please do give this video a thumbs up as well if you can. And you can join us also on our Facebook, Instagram, Twitter, and LinkedIn. The details are there up on screen. So thank you very much for joining us, guys. Do take care. And do read the information below as well. You can join us currently for 2 weeks, completely free, no contract of any kind. So do feel free to join us. And then if you decide to stay on, you can access over 76 webinars per month for only $9.99. So we do hope you will benefit extremely from that. So thank you very much. Take care. We'll speak to you soon. For everyone here, bye for now.